I've been dry. I made the joke about Nelnet. No one actually cares about that. We want to talk about FTX collapsing. Ryan, you put some notes on this. It is maybe the biggest thing in VC since Theranos. Um, I don't know. Why don't you kick it off?
Yeah, I was a little reluctant to talk about this because there's stuff about the collapse that I don't understand, and just crypto generally. There's a whole bunch of all uh the ancillary stuff to crypto with all like the staking and a bunch of that stuff. I really don't pay attention to it, so I have a lapse in understanding. But the collapse of FTX is actually pretty entertaining. Maybe that might feel disrespectful to people who had money on it. It's fun to watch from the view from the side because frankly it's just really exciting. And apparently what's his name is going to be writing a book about it. The what's you know
Michael, Michael Lewis, Big
Michael
Short,
Lewis.
Moneyball. Really awesome that he is apparently following this guy right now. The guy has the magic. Michael Lewis has the magic touch, and hopefully that book gets out soon. So yeah.
Yeah. So let's go through what all happened. I've jotted down some notes because I wouldn't be able to commit it from memory. And there's a whole bunch. I encourage everyone to go read articles on it too, because there's a whole bunch of people that are impacted, especially the VC community, from this. That's slightly entertaining as well. So, for those that don't know, FTX is one of the world's largest crypto exchanges, and they collapsed. What was it? 2 days ago now? 3 days ago? And previously, to kind of lay some context, Binance, which is the world's largest exchange, had invested in FTX. This is kind of trying to get to the root of where the collapse came from. So they'd invested in FTX. However, the CEO of FTX, who's sort of this interesting character, I should say, people called him the next Warren Buffett. He was on the cover of a bunch of magazines, kind of like one of the faces of crypto.
The Madden curse, the fortune. It's unfortunate. Never go
Honestly,
on
yeah.
that. If the likelihood we ever get asked for that is low, but if that ever happens, we say no right away.
However, yeah, I wish I could short anyone that's called the next Warren Buffett. I wish I could short them instantly because it never pans out well. But anyway, the CEO of FTX, which is Sam Bankman-Fried, I believe his name is, and the CEO of Binance apparently had a falling out. And the CEO of Binance, he goes by the acronym CZ, the same way Sam goes by SBF. But because this kind of falling out, and they saw they kind of saw the industry differently. Apparently SBF thought that they should try to get along better with regulators, and CZ was thought that kind of destroyed the decentralization idea of it. Um, and so because of the falling out, they Binance wanted to sell their ownership and or get rid of it, and they did so in exchange for FTT coins. Now this is where it gets a little wonky because we're playing with Stanley Nichols here, but
it's
F-
it's 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 confusing. It is very confusing.
FTT coins are the FTX, which is that exchange that went bankrupt. That's their own coin, or it's their own token. They created it, and apparently it was meant to be sort of it was intended to help people trade in and out of different things, kind of provide some liquidity, is what I'm getting. And it was the only real thing that they said was anyone could redeem it for $22 if they wanted to. So FTX would give them the $22 in exchange for those FTT coins, which, I mean, that is just risk on its own. But apparently, a report came out from CoinDesk, which is one of the big crypto kind of news sources, that showed Alameda's balance sheet. And so Alameda, to kind of backtrack here, is an offshore crypto hedge fund. So I believe it's headquartered in the Bahamas, run by Sam Bankman-Fried. So he's the CEO of FTX, and he has this offshore hedge fund
It
that's
was like, yeah, it was an it was an arbitrage crypto thing since it was such an inefficient market. Yeah.
which, I mean, that's cause for its own concern. But
When it's in the Bahamas or what? That's always a red flag.
I typically think it's always a red flag when the your businesses are located in the Bahamas to literally avoid the regulators in the US. And
Yeah.
and we've seen the story before where when the CEO of a business has its own hedge fund that he runs, there's immediately conflict of interest. And so anyway, Alameda apparently had billions of dollars worth of FTT, which is that FTX coin. And I know it's starting to sound complicated, but basically the CEO is using this Bahama-based hedge fund to borrow money, and he was posting that FTT as collateral. So theoretically, if FTT collapses in value, then it hurts the lenders and all the other owners of FTT. Well, Binance saw this and they basically decided it was unsafe, so they sold a big block of FTT, which they got that by exchanging their ownership in FTX for FTT coins. That sale started the collapse of FTT, and so once that collapse started to be begun, other traders on FTX saw it. They were using it, like I said, as a cheap way to kind of trade in and out of things. They wanted to liquidate their FTT, and that kind of perpetuates that run on the bank that we began to see. And then there was a whole bunch of withdrawals or attempted withdrawals, and FTX had to pause because they literally didn't have the money to give back to people. Ultimately, this comes down to leverage and them.
And self-dealing to the hedge fund, right? Where they give it out.
Yeah. And I mean, it's hard to know where all the money went because this hasn't been settled yet, but basically they didn't have the money and they had
And
to.
it could be a $10 billion hole, like gap between the assets and liabilities, right?
Yeah, that's what apparently most recently the SBF, the CEO said, we just need 9.6 billion and we'll be fine, which no one's failed.
Just a small bridge loan. Yeah. I think
Yeah. But we'll see how it goes in bankruptcy. We'll see who gets their money back. Here's a couple of the high profile collapses that have happened so far. Three Arrows Capital, Celsius, which is like that not the drink company, it's some crypto
right. I remember that. Yeah.
can't remember really what they did. Terra Luna, that guy, Do Kwon, BlockFi, which was apparently acquired by FTX because FTX had lent them money and they had posted collateral for them. So they bought BlockFi when BlockFi was having troubles and made it seem like, all right, fine, we'll step in, we'll be the hero, but they would have had their own troubles if BlockFi went under. So they stepped in, they bought them, and now FTX themselves. So I think we're now seeing how much leverage was in the system.
Yeah. Is Tether next? That's the big question, I think.
And I think we're also seeing how intertwined a lot of these are, because when you press the prices down on the crypto, it's hard to keep this cycle going. It's hard to keep your house of cards propped up. So,
and by that,
the question is, what ramifications does this have for the rest of the industry? And how long until people just lose trust in the entire system?